buy and sell ETFs and index funds, and we're also going to make a trade, so stay tuned. Let's get right into it. I've got my screen in front of me, and this is stockcharts.com, and the one that I'm going to buy is real simple. It is SCHB, so Schwab US Broad Market ETF. This is the one that I want to look at. Now, the reason that I've chosen this one and the reason I'm looking at this one is because it is a broad market ETF. The reason you want to buy an ETF or an index fund is because you want diversification. You want to own companies in multiple different industries so that if one goes down, it doesn't affect your entire portfolio. This is a great ETF for that because it focuses on the US, but it has a broad market, meaning it has companies from tons of different industries and sectors. It has so many companies, in fact, it has 2,500 of the largest publicly traded US companies. So that is the reason I am buying this one. It is a broad range of US companies. It is focused on the US, so it should grow over time, and it is extremely well diversified with extremely low fees. So what I mean by that is the net expense ratio of what it's going to cost me to own this is less than 1/3%. So it's almost zero. I can get in and out of this really easy. It's super liquid. It gives me instant diversification, and it's great to get in for any first-time investors, somebody that wants to get into the market, or somebody that needs to add diversification to their stocks. So let's go back to the actual chart here, and we're just going to break through it. Again, it came in pretty steady on the left-hand side here, fairly bullish. COVID hit and it's starting to recover. It is trending fairly similar to the Dow Jones. It is a little bit higher in the recovery compared to the Dow Jones, but that's a good thing. That's a good sign to see. Now, one of the really key things that I want to point out here and why you might want to invest in an ETF or an index fund is that diversification of owning so many companies, rather than giving you exposure to a certain company or a certain industry, gives you exposure to the market in general, the US economy in general, in particular in this case. And the reason that's a good thing is because over time, the economy has proven to grow. So I'm going to show you as far back as I can go here. It shows me 10 years. If you looked at this chart over the last 10 years, you could see that in 2011, this ETF was about $25. It's now at $71. So over the long term, these ETFs have proven to generate consistent, steady returns. They're a safe investment. They give you instant diversification, and they're the perfect first-time investment for anybody that's looking to get into the market that isn't ready to pick and choose their stocks. It's also a great option for anybody that just needs to add some diversification to their portfolio. Over the long term, these mimic the returns of the market and of the economy, and over the long term, that has generated a 7 to 9% return. Now, if you buy in and all of a sudden 2008 hits again, or we see a major economic recession or a giant crash, things can change pretty drastically. However, over the long term, you're guaranteed, almost guaranteed, to make a 7 to 9% return on your money. So that's why somebody might want to buy into an ETF or an index fund. In this case, I'm choosing Charles Schwab. You can also choose Vanguard. You can choose BlackRock. There are plenty of them. You can just type in Google different index funds or ETFs based on what your goals are. So I chose Charles Schwab. Over the last 10 years, it's done extremely well. Over the last 1 year, it hasn't done quite as well because of the COVID impact, but it is recovering fairly well. And as you can see here, over the last 10 years, it has been fairly steady. So really exciting to see, really good. I've decided that I'm going to buy this one to add diversification to my portfolio, and I'm going to show you exactly how I would do it. Now, I'm trading with RBC, so all you would do is click direct investing and then type in the ticker of the one that you want to purchase. Right now I'm buying the Schwab US Broad Market Index, and I'm buying it on the US market. Right now it costs me $71.80 per basically share of this, and so I'm going to buy into it. So I'm going to buy a $5,000 position. Let me just find my phone and do the quick math on this. 5,000 divided by 71 equals about 70 shares. So I'm going to buy 70 of these. That's going to give me a $5,000 position. I'm going to do it on my US margin account. That's okay. So buy 70 Schwab US market price. They're good for the day, any part. We're getting right into it. And now we have just placed a $5,119 trade that has purchased shares into the Charles Schwab broad market index ETF. Now what that has done, it has taken our $5,000 and it has dispersed that money amongst 2,500 different companies. It has instantly diversified our $5,000 investment amongst 2,500 different companies and given us exposure to basically the entire market of the United States. So if the market in general goes up, we should do very well. If the market in general does poorly, we're probably going to do poorly. But over the long term, 7 to 9%, that's what we should be expecting. However, I'm not going to be trading in and out of this. I am not going to be setting a stop loss. This was a long-term investment. This was me putting $5,000 away in my future. This was me putting away $5,000 and hoping to get back 7, 8, 9, 10, 15, 20 years from now, knowing that it's safe, knowing that it has exposure to the market. I'm going to make the average return, and we are going to be diversified. We're going to be well balanced, and we are going to be well managed with low expense fees. So I'm not going to see expenses draining this account over the years. So overall, I'm really happy with this. You can do this with any index fund, any ETF. You can just find them online, do your research on them. I pulled it up really simple here. Shows you the objective. It shows you the highlights, straightforward, low cost fund offering potential tax efficiency, 25 of the largest publicly traded companies. It's really simple to do. All you have to do is your basic research to find out how you want to diversify. I would recommend maybe a world index and a US index, or maybe your country's index and a world index, or an ETF could be great options, but it depends on what your goals are, what your objectives are, and can you handle mentally putting $5,000 or X thousand dollars away and saying, I'm not going to touch this for a couple of years. And that's the goal here with the index and ETF investing, is long-term investing for consistent and steady gains, just like what we showed you on the 10-year chart of the SCHB chart. So lots to learn here. If you have any questions, send me an email. And if you get any value out of this video, please remember to show some love. Thank you.